Good morning. This is Larry McMillan with a stock market update on Monday, March 20th. So the stock market last week bounced around, generally tried to work its way a little bit higher, especially on Thursday when there were some rumors that things were calming down in the new financial crisis, but those were kind of trashed on Friday. In any case, we're still maintaining a core bearish position because there's a pattern of lower lows and lower highs on the S&P chart since the beginning of February, and the put-call ratios are solidly on sell signals. S&P has resistance. Last week's highs roughly they're just above 3,900. And then there's support in the 3760 to 3850 range. So that's kind of a tight range. We'll probably break out of that pretty soon. So we'll take a look at the individual indicators and see what they're saying. As I said, the equity-only put-call ratios are bearish. They're racing higher. In fact, the standard ratio is actually now at its highest level than it's been since April 2020. So that's quite oversold. But these both equity-only ratios as well as the total put-call ratio are all moving higher, and they won't generate sell signals until they roll over and begin to decline. Breadth was pretty bad last week, and so the breadth oscillators are deeply oversold, but also on sell signals. So they could probably withstand a couple of days of positive market action and still remain on those sell signals. So this is a case where oversold does not mean buy. New highs versus new lows. New lows are dominating once again, so that indicator is also negative. We are getting the one positive indicator right now. Well, actually two. I skipped one. The McMillan Volatility Band indicator has given a buy signal as of last Thursday on the S&P chart. That's a sort of intermediate term signal, but it will be in effect as long as S&P remains above the -4 standard deviation band. And then when we take a look at VIX, we have a spike peak buy signal in VIX as of last week as well. That's a signal that lasts for about a month, but it has had a spotty track record in the bear market of the last year or so. It has a much better track record during bull markets. The construct of volatility derivatives is a little bit worrisome. The term structures have flattened out, and that's okay. That's not a sell signal, but if they do invert, which is possible, then that could be quite negative for the market as well. So overall, we're still maintaining that core bearish position. We will trade other confirmed sell signals around that. Not too many sells setting up, although it's possible that a trend of VIX sell signal could set up. But mostly it looks like these oversold conditions will eventually produce some buy signals. We just don't know from what levels, since the market can decline quite substantially while it is oversold. Meanwhile, I invite you to visit our website, take a look at the daily letters that we have so you can keep up with these things in a more timely manner. Meanwhile, have a great week trading.